You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music can mean only one thing. TWIFO is back. Yes, This Week in Futures Options is back for a new year, nay, a new decade here, kicking it all off in 2020. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Hope you guys had a great new year. Hope maybe you're still celebrating out there. It's been kind of a tumultuous kickoff to the new decade out there. But outside of that, hopefully you and yours are all doing well and have a great new year and indeed a new decade in store for you. We have a lot of fun stuff in store for us here on the show today to kick things off. And who better than to help me do that than the man, the myth, the legend himself, our old buddy, Mr. Sean Smith, the managing director of derivatives licensing over there in FTSE Russell land. Sean, welcome back to TWIFO. Happy New Year, and indeed, happy new decade to you, sir.
Happy New Year, Mark. It's great to be here. Thanks for having me. Very excited for a new year, and a new year working with you alongside your show. We're going to have a great year. We're going to have a great performance of a Russell 2000 small cap index in 2020. It's just great to be here, and Happy New Year to all your listeners.
Now, little birdie told me you were scheduled to be in studio, but I heard you're a little bit under the weather. It does seem like this new year is coming in kind of rough. Whatever is out there felled me pretty nastily last week, sir. I spent most of New Year's Eve and the next day in a fever-induced haze. I don't remember much of it. So hopefully you're faring a little better than I was a week ago, Sean.
Yeah, I'm struggling, but and no fever. But I got the rest of the symptoms. Just thank goodness I'm not above the 100 degree mark, which is good.
Well, thank you for not.
I'm good enough, but I just I'm always thinking I'm contagious, so I figured I'd dial in rather than come over there and infect everyone.
I appreciate that. I've had enough sickness the last few months to last me for a bit. I don't need more fever dreams anytime soon. Well, Sean, let's kick it off. Let's do a little final look back. We have the numbers finally, the actual final numbers for 2019. The last time you all gathered here together on the show, it was kind of more anticipatory. Now we have the actual numbers in our hot little hands. We can look back at the biggest winners and losers, indeed the movers and shakers, for all the things trading over there on CME land in 2019. I have a feeling, Sean, I know where you want to start, but I will let you choose once again. Should we go dark side or light side for the year, sir?
We got to go top 5.
All right, let's go top 5.
My glass is half full.
Yes, your glass always. Even when you're sick, the glass still half full. That's what I like about you, Sean. And it was a big year for winners, much more demonstrable on the upside than it was on the downside. So our top 5, this is for the year now, listeners, the biggest winners for the year of 2019. All the vast array of products that trade over there on Globex. By the way, you guys, as always, can play along the home game, cmegroup.com/TWIFO, TWIFO. That's where you get it. I think TWIO also works this week in options. Kind of an old anachronistic term for the show, but they both should work. Try them out on your browser of choice, and you too can follow along. And if you do that, if you set the market scans back to 2019, you can see these numbers for yourself as well. Top 5, number 5 of the top 5, our old friend WTI had a pretty good year, up 31.2% overall. So a lot of that coming in the latter portion of the year as we saw some interesting developments out there. You know, everyone was lamenting the lack of call love out there, and yet WTI up 31%. So go figure. You don't need some call love when you could rally 31%, apparently. Number 4, the Eurodollars. Our old friend, the Eurodollars. Mr. Rhodes always gets mad at me. Don't talk enough Eurodollars on the show, but they did well. Here they are, kicking off the show. So there you go, Russell. Be happy with that. 35.02% for the year up in Eurodollars. Number 3, our kind of surprise for the year, Class 3 milk, dairy, all things dairy. Kind of lighting it up this past year, up 35. Actually, so that I take that back. This should be actually 35.1. No, this is right, 35.1%. So just barely eking out the Eurodollars. That was at 35.02. Hence why we have to go out into the decimal points sometimes here, listeners. Number 2, NASDAQ. The NASDAQ 100 E-mini doing 37.4% to the upside. And number 1 with a bullet to the upside, Palladium. Just knocking out of the park last year, up about 59.25%. So a good year for the metals, a good year for WTI, a good year across the board for a lot of these products. Now we turn to the dark side. Sean, cover your ears. I know you don't like hearing this stuff, but we have to do it. This is the dark side, the not so much winners of 2019. Let's go to the bottom of the dark side first, the easiest point of entry. Actually, it's funny how the bottom half of the top 5, not really much, and then you get to the number 1 spot here. Number 5, it was the old Euro USD at about a little north of 1%, about 1.16. So the Euro, not looking too good. Number 4, but actually off 1%. That's pretty negligible, all things considered. Number 4, feeder cattle, off 1.18%. So a tie there for the number 4/5 space, pretty close to it. Number 3, KC wheat, off about 1.32%. Number 2, soybean meal, off 3.25%. And then number 1 with a bullet to the downside, off well into the double digits. You got nat gas, off 22.6%. So that was kind of the one stark contrast. Everything else was kind of middling for the most part to the day. It wasn't really a big downside year for a lot of these commodities out there, except for nat gas. Nat gas, obviously, dominating the tape here across the board. We got some other numbers, of course, for the year. CME putting out their kind of year-end annual volume, and, of course, their December numbers as well. Some interesting numbers coming out here. ADV for the year, let's see, 19.2 million contracts. That's their ADV, of course, average, of course, the entire year, and hit 15.5 million during the month of September. OI at the end of December, 113 million contracts. A few nuggets that stood out to us. Let's see. Record 40 trading days with volume over 25 million contracts. That's up nearly 30% from 35 days last year. So that's interesting. 2018 was a record year on the equity options side, and yet more trading days with volume over 25 million in 2019 on the futures options side than it were in 2018. Futures and futures options, I should say. Interest rate ADV, as you mentioned, continues to dominate. Record of 10.3 million contracts per day. That's up 4%. A paltry 4%, but still talking a lot of paper out there. Also record in the metals land as well. ADV of 668,000 contracts a day. That's up 5% from 2018. As you saw, a lot of turmoil on the market helps to feed some metals ADV, and interesting spots like palladium and copper are doing interesting stuff as well. We'll get to all that in the metals in a little bit. And record overall options ADV. We like to see that. 4 million contracts per day. That's up 2% from 2018. So options were where it's at. And CME land last year. Let's look here really quickly. Some interesting nuggets across the board. If you want to know rates ADV was 7.1 million contracts a day. This is for December now. This is for December numbers. Equity index was 3.6 million. That's the ADV for December. Energy, 2.1 million contracts for December. Ags, 1.13 million contracts for December. Metals, 529,000 contracts. And FX doing 1.02 million contracts. Pretty decent for FX out there. And some other nuggets in December. Ag ADV jumping 8% in December from this time last year. All right, so we'll get to some more looking back when we get to some of the individual product categories in a little bit. But before we do that, Sean, once again, I must offer you a choice, sir. Let's see if you can mix it up this time. Or maybe you want to go light side again. I don't know. Now we get to look at what's lighting it up this week. So you want to go upside or downside once again, sir?
We're going upside.
You're persistent in your optimism. I like it. You know, you're staying true. You're staying on brand. That's what we expect from you, sir. Well done. All right, let's go upside again this week. See what's lighting it up this week. Number 5, Nat Gas, up 1.65%. Number 4, gold, up. Not quite as strong maybe as you might have thought towards the beginning of the week, but still you can put that story out for a lot of things this week. Gold up 1.67%. Number 3, feeder cattle, up 1.69%. I'm seeing a little bit of interesting overlap with our top movers for the year as well. Number 2, rough rice, up 2.36%. Number 1 with a bullet this week, and indeed for the year, once again, palladium, up 6.8%. To the dark side, we've got WTI in the bottom of the dark side, down about 2.4%. Then we got RBOB gas, getting a little bit of a theme here, down 2.51% actually. Number 3, heating oil, continuing the theme, down 3.36%. Number 2, lumber, down 3.4%. And number 1 with a bullet to the dark side, I should say this week, lean hogs off 6.57%. It's been an interesting week in metals. I want to get to all that in a minute. But first, Sean, it's been a while since we've checked in with you and chatted with you. So let's start all things equities. First off, obviously it was an interesting year for the Russell 2000. Overall, a pretty good year, up nearly about 24%. I think it kicked off the year about 1346 and it ended the year north of that level everyone was talking about, right? 1600, closed at 1668. So a pretty interesting year from an overall Russell 2000 perspective. What really resonated for you? What stood out for you over the course of 2019 from a Russell 2000 perspective, sir?
Well, just think about that, right? 24%. 24% in 12 months. That's tremendous performance. Very exciting to see that. I'm also excited to see the volume and open interest of these products trading with our partner exchanges. CME's volumes, are north of 170,000 contracts a day coming into the new year. So they're off to a great pace. There's over 500,000 contracts of open interest in futures and options. A lot of volume coming out of Europe and Asia. So I'm excited to see those numbers staying strong. And the various segments trading the market, they're all strong. The total number of clients trading the products is continually growing, which means that CME's out there really selling this product and creating this tremendous solution for clients that want to trade equity products. So, one, you got the open interest, which is a sign that these are investment vehicles, not so much just trading vehicles in and out. Open interest is that sign of confidence in a market, right? So, lots of investing going on there to capture that performance in the market. But 2, lots of volume, which means there is intraday, there is intra-week, there is intra-month interest in trading the product. So, when you look at that and you look at the volumes getting stronger with our partner CBOE Global, CBO Global, it's just very exciting to see. So it all just continues, and I'm just excited that we're early in 2020 and things are going so well.
Yeah, it is interesting kickoff to the beginning of the year here. Looking at some of the numbers here from a vol perspective out there in equity land right now. Our old friend VIX Cash, aka S&P 500 vol, it's at about a 1285 or so right now. Puts it up about a third of a handle from where it was this time on our last show. VVIX is 89.5. That's a volatility of volatility. That's down almost 10 handles, about 9.25 handles from our last show, which is right around mid-December, of course. And our old friend RVX, aka the VIX of the Russell 2000, it's at about a 15 even. That puts it up about 0.75 of a point from last show. That puts that spread a little bit north of 2, about 2.15 or so. So it's widening out a little bit. It was a little bit tighter than 2, actually, the last time we gathered here together. I think it was like around 1.75 or so. So a little bit wider, but still on a much narrower end of the range. Usually hovers around a 3 to 3.5 or so out there. So interesting to see that spread kind of lighting it up. Let's see out here what's lighting up. Kind of a quiet start to the new year over here in Russell 2000. Everyone's waking up, coming back online, paying attention to what's going on in global energy and everything else, to a tumultuous start to the new year. It seems like with the Russell 2000 at about a 1670 right now coming into showtime, 1675 calls out there in Jan are where the action is lighting it up to the tune of a pretty decent clip out here. And let's see, vol coming off a little bit. As you might imagine, we're in rally ho mode for the end of the week here. It seems like people are putting some of the early madness of the week behind us, so that's given a little bit of a lift to broad equities today and giving a little bit of the old downside to vol. But we're still up a little bit from where we were in mid-December, so that shows you how vol has evolved a little bit out here since the last time we gathered here together. Speaking of vol and equity markets evolving a little bit, great piece, Sean. I'm not sure if you saw this. Just hit hot off the presses from our buddy, Mr. Eric Norland. I don't know when that guy sleeps. He was just on the show. He just broke down a whole bunch of great research for us on the show. He talked about gold, skew, and a bunch of other things. And I guess he decided we didn't have enough to talk about on the show because he hit us up with this, which is all equity-focused research right now. And the paper, I encourage you to check it out for yourselves, listeners, over there at CMEGroup.com. It's called, In 2020, Equities Are Partying Like It's 1999. I will say this for Eric. He has a flair, a penchant for some fun headlines to his research. And some of the takeaways from this research are the sectors that were winners in the 1990s also won in the 2010s. He's looking at it by decades now of how equities performed. The strongest sectors in the 1990s underperformed between 2000 and 2009. Equities overall, he says, are back to their Y2K valuation extremes. Interesting. Perhaps not too far off. Remember, Y2K was getting close to the beginning of the end of the upside. Early in 2000 is when the worm kind of turned on that late 1990s rally. Said rates, though, by way of comparison, only a third of their levels from 2000. He mentions here, if the 2020s are robust economically, tech and consumer discretionary shares could outperform. He says if the 2020s are troubled like the 2000s were, then defensive stocks might be the winners. He puts out here, did we just finish the 2010s decade, or was it the 1990s all over again? Superficially, the two decades exhibited a lot of similarities. Unemployment fell, inflation remained stable, and stocks soared. This is over the course of the last decade, obviously. By the end of both decades, equity market capitalizations were over 130% of GDP, and both decades also experienced weak commodity prices and emerging market stress. As always with Eric, a lot of great visuals, a lot of great charts, a lot of great analysis here. I'm kind of just touching on the surface of this. Sean, I don't know if you had a chance to check this out, but it's a pretty interesting bit of research. He kind of points out a lot of the stark similarities between the 1990s and the 2000s and a few of the key differences and the 2010s and maybe what we can expect from the 2020s. And I know you're a fan of Eric's research over there, Sean. Do you have a chance to check this one out as you're fighting off your fever haze, sir?
I've got the report, and I've taken a quick look. I actually have the same bullets that you just kind of gave to our audience, but there's a lot to read in here. So I strongly recommend that people that have access to it. It's on their website, right? So it's on CME's website. I strongly recommend you read this. Yeah.
They don't make it hard to find Blue and Eric stuff over there. Head on over to CMEGroup.com. It's usually front and center. A couple other nuggets Might be interesting, listeners. At the beginning of the 1990s, U.S. economy was heading into recession, plagued by a crisis of small banks and bad real estate loans, and the Fed was slashing rates from 9.75% down to 3%. At the beginning of the 2010s, the U.S. unemployment rate was nearly 10%. The banking system obviously just beginning to recover from the 2008 meltdown. Housing prices had collapsed nationwide, and the Fed was experimenting with zero rates and quantitative easing. He says, superficially, the beginning of the 2020s looks a great deal more like the state of the world in 2000 than it does in 1990 or in 2010. Unemployment is below 4%. There are no obvious problems with the banking system. Real estate prices are on a modest upward trend, but don't appear to be in bubble territory, and energy and materials prices are far from historic highs. Those are a few nuggets to kind of set the stage as you're doing your equity analysis. But again, I encourage you to check out that paper indeed for yourself over there. Let's keep on rolling, Sean. A lot of things are lighting it up this week. Obviously, we had a lot of drama over there in the Middle East, and as a result, we saw a couple of key sectors really moving and shaking. Perhaps not the degree you might have thought. Let's start with metals, because everyone was talking gold this week, and gold moving quite a bit out there, at least to start the week. We saw gold spiking above 1,600. Everyone was waiting. We broke through 1,500. Everyone was waiting. What was it going to take to get us over 1,600? Well, it was effectively an assassination of an Iranian general, and then the lingering will they, won't they dance that came afterwards that drove us above 16,000, hit 16.13 an ounce on January 7th. Those are some of the highest levels we've seen since 2013. So you got to go back about 7 years to really see those levels. And yeah, just a week into the year, gold gained about 3%. Obviously, as we marked with crude, and we'll get to this in a little bit as well, gold couldn't really maintain those levels. And once the strikes and the counter strike from Iran was done, and it was clear that there wasn't going to be a series of escalation there, it seems like, if anything, it was a bit of a de-escalation. Then the markets calmed down, gold calmed down as well. Come into showtime now, we're seeing gold at about a 15 double right now. That puts it up a whopping 5 handles. Actually, no, I'm sorry, up 1.3 handles. So 0.08% on the week. So yeah, not exactly a robust finish to the week, but given how things could have played out, maybe some folks outside of the gold space are a little happy with how that played out. Vol net on the week, kind of a bit of a mixed bag. Once you get out beyond kind of the crazy Jan contract, vol was pretty much coming off. As you might expect, you saw a lot of vol swirling into this contract as no one knew what the heck was happening at the beginning of the week. Now, once it seems like calmer heads have prevailed, vol coming off a little bit here as well. The most active contract out here was the Feb contract. Let's see. Yes, it was the Feb contract with about nearly 30% of the paper out here. And the big trade was the 1575 call. So not quite 1600, even though those were pretty active across the board. It was 1575 calls leading the dance with about 13,000 of those bad boys out here. The lion's share coming, surprise, surprise, on Monday, 8,700. And then the rest kind of scattered throughout the week. That was actually, interestingly enough, that was closing paper. So people maybe had some upside on Monday and then took it off once we rallied through that 1575 strike. Interesting stuff out there. Let's see, 1600s were pretty active, as you might imagine. They did about almost the number one spot, pretty close. Number two, about 12,700. Their biggest day was on Monday, and they were actually opening on Monday. About 7,100 actually traded on Monday, with about 2,400 of that opening. So opening paper on the 1,600 strike, that's not exactly surprising, blowing through that strike. Number three, we got 15 half puts, 12,000, about 200 or so of those, opening pretty much the entire week. So a lot of new opening paper on these 15 half puts. And let's look really quickly here. Number four were the 16 half calls. That's getting pretty far out there now. About 9,000 of those, half of that coming on Monday. A good chunk of that opening as well. So if 1,600 wasn't bullish enough for you, 16.5 was out there. And you even saw some 1,700s taking the number 5 spot here with the 6,300 or so. The lion's share actually coming on Wednesday, 5,300. So pretty much all of that going up on Wednesday with slightly closing. Interesting. 1,700. So maybe someone decided earlier to put some on and then taking them off once it seemed like cooler heads were prevailing out there. Let's look really quickly. We like to look a little bit farther out for some funky paper. Yeah, we're going all the way out here to March of 2021. And the 2075 calls are lighting up this week to the tune of 2,750. So if 1,700 and all this other fun stuff wasn't bullish enough for you, we also had 7,500 actually of the D's 1,900 calls. I take that back. That actually probably would be in the number 5 spot by a pure volume perspective. So that's actually pretty active. And that was all on Tuesday, and that was pretty much all opening. So someone opening for size to the upside here on the 1,900s in D's. Interesting paper out here. You don't usually see that much size going up in the farther off contracts. But this week, that was indeed the case. I might have to keep an eye on those bad boys and come back to those and see how they fared. Speaking of how things fared, it was pretty much a record year across the board for metals over there in the CME land. Combined futures and options ADV, like you mentioned, 668,000 contracts in 2019. That's a new record. Metals, futures, and options combined have now set annual records the last 4 years in a row in CME land. So people are lacking themselves some metals out there. That's why it makes it into the show so often. Metals ADV increased 20% in December as well. That's, of course, driven by an overall 22% growth in precious metals futures and options volume and 15% growth in the base metals futures and options volume. The average combined metals OI was 3.66 million contracts. That's also a new record for the year. And that's another one that showed consistent growth. And gold itself also setting a new open interest record on December 31st of 786,000 contracts. So a good year for gold out there, net OI, net volume-wise as well. Net trend was obviously doing pretty well out there as well. But it wasn't all precious stuff. Let's see some other metals set ADV records last year. Gold, we just mentioned. Silver, the options ADV was 87.63. That's up 20% from 2018. The weekly options also up 223% from 2018. So starting from a smaller base number there, but still impressive growth nonetheless. Platinum on the futures side, not really an option story. We talked about it before in platinum, but the futures are up 7%. The micro gold getting some love, up 217%, again, growing from a future. Some smaller number, I should say, but good growth there. Copper, the options, we kind of talked about this before. Copper options up 100% this year. The ADV closing in on 3,000 contracts a day. So in the past, copper hasn't been a huge option story, but perhaps that story may be changing if this continues to double every year effectively. We might be changing that tune pretty quickly. Other things got added to the mix here from a metals perspective this year. Shanghai gold futures. CME added those on October 14th. 42,719 contracts traded out there this year. So if you're looking for something beyond your traditional COMEX gold contract, maybe you want to sink your teeth into some Shanghai gold, well, there you go. They got you covered. And interesting, yeah, you mentioned copper already. Copper explosive year, up 100%. Options ADV closing in on 3,000 contracts a year. Looking at this chart for copper options and OI, the trend is its friend out there. So as I said before, copper again, not really a huge option story, but hopefully that will change. All you were asking about some other esoteric metals, aluminum. Aluminum did pretty well as well. Again, this is more of a futures story. Futures Q4 ADV hitting a whopping 139 contracts, but and the average aggregate OI exceeding 500 contracts. The ADV for aluminum 671,000. I wish 671 contracts. That's up about 9%. So not growing and strong, and in the positive category, but not quite what copper is up to out there. Again, I encourage you, if you're interested in that, they have a whole breakdown of all the different metals categories out there and how they all fared over the course of 2019. All right, Sean, we had an interesting week, not just for metals, but also for the energy sector. What do you think? Should we hit on crude next, sir?
I'm waiting to hear. I'm waiting to talk about crude.
You're waiting over there. You're my go-to crude guy. You know that, right?
I think I am. I think I'm your only go-to guy right now.
Yes, that's true. You're my go-to for all things. Crude, metals, ags, you name it. Mr. Sean Smith, my go-to man for all of that this week. But, of course, it was a crazy week out here, not just for metals, but, of course, all things crude out here as well, and all things energy in particular. You mentioned nat gas at the top of the show. But WTI also moving, and it's been a kind of a common refrain now in WTI land and indeed in crude land across the board here that crude can catch a bid, just can't really keep it. And the bid that it catches isn't really perhaps as much as you might have thought. And that was pretty much the case here for what we saw. Of course, once the assassination became known and people were looking for the counterattack and there were fears of escalation throughout the Middle East, we saw a bit of some upside move. We saw Brent jumping north of the 70 handle, hit 71 and about 3/4 a barrel. WTI topped out on the upside around 63 1/4 as well, but both of those pretty much gave that back very quickly. Brent dropping below $66 a barrel, whereas WTI dropped back below 60 again. In fact, coming into the showtime now, we're seeing WTI at 59.60, so shy of that 60 level again. All of you out there who have been wondering why the call wing can't really maintain itself and sustain a bid, that's because of price action like this. It can't really maintain upside, so it's kind of hard to argue in favor of aggressive bids for those calls as a result. It's like we said, coming into showtime, crude WTI is actually off about 3.5 handles, or about 5.5% here on the week. That puts it at about our 59.5 is right on our at the money strike out there. Again, let's see what's going on from an overall volume perspective, all things WTI. It was the Feb contract that was dominating the tape this week. That has about 6 days to go, so kind of hard to parse that from a skew and vol perspective. But 41% of the paper was going up out there, with the lion's share coming on these 60 puts. That's not exactly surprising. We broke through 60 to the upside, and then we kind of came right back. So this 60 strike makes sense that would be in people's imagination. The big day for those was Wednesday, with 14,000 of this nearly 27,000 going up. So nearly half of a day's of the week's paper actually going up on Wednesday out there. So that was the big day, followed by the 65 calls. They did 21,300 this week. The lion's share also Wednesday, 11,000 of those bad boys out here as well. I can touch on skew quickly, but it's kind of a meaningless number, such a near-dated contract. The puts were about 6% rich. The at-the-money this week, they're about a percent cheap, so they've come in markedly. The calls were 2.1% cheap last week. This week, they actually have a bit of a bid, 10.6% rich to at-the-money, but again, this contract's going away in a few days, so kind of hard to parse that. Let's go out to the number 2 contract to look at the skew and the vol out here, listeners. We got to go out to March to get the number 2 contract, with about 26% of the paper going up out there. That's a little bit more sane analysis. The vol out there actually up net on the week, about a little north of a point, about 1.125 points out there from a vol perspective. So vol continuing to maintain a little bit of firmness despite the fact that we rallied and sold off. Remember, at the end of the day, price movement is going to equate to volatilities, whether it's upside or downside. If you're moving, you're going to have some vol, and that's pretty much what we saw out here this week. And it seems like maybe some of the concerns and some of the unknowns are still lurking out there, which is maybe keeping a little bit of a lift to this vol. Usually after the event is done, we see the vol collapse in products like WTI. Not quite seeing that this week, which is kind of interesting. Again, 26% of the paper coming in this March contract. The puts and the skew out here, the puts were 8.3% rich to the at-the-money last week. This week, they're about 7.25% rich. So they've come in about a point, but still the bid is to the puts. The calls were 3.6% cheap. This week, they're actually about 0.6% rich. So calls getting a little bit of a lift. Maybe that's what everyone's been looking for out there. I don't quite think it is, but it's something. It's a move to the upside for the call wing, so maybe that is something you can take all the way to the bank. And out here, the 70 calls with a big print out here in March, doing 21,600. So a pretty active week for upside here, kind of across the board. Let's go out really quickly and see if any funky longer-term prints came on our radar. 80 calls did a whopping 100 contracts this week out here in Jan of 2021. Outside of that, not a heck of a lot of weird, funky prints out here in all things energy land. Since we touched on it and it was moving this week, let's touch on nat gas a little bit as well. That's kind of been a story that's just continues to move. As one of our biggest movers of the year last year, and as one of our big movers of the week here this year. Let's go out. You know I like to do my select all, listeners. Up to you how you like to view this information. Select all could be a little bit much for a product like nat gas, but for me, I like to see the entirety of the breadth of a product in one fell swoop. CMEGroup.com/TWIFO is the place you guys can go to see that for yourself. Come into Showtime Nat Gas at about a 2.15 out there, with the lion's share of the paper coming in the Feb contract, which is going away in about 19 days here. 30% of the paper going up out there. The two-half calls, actually I take that back. The two-half calls are the most active in Feb, but the number one contract out here this week were the 1.75 puts in March, doing nearly 22,000 contracts here this week. So kind of interesting, a little bit longer term, at least compared to Feb. A little bit farther out of the money puts dominating the tape out here. Let's see if there's maybe a spread or a vertical going up out there to explain that. No, the lion's actually today, nearly 12,000 of that 22,000 contracts going up today here on these 1.75 puts. One-half puts were trading as well, but not quite, it looks like, in anything close to a ratio that would make sense for some sort of ratio spread. So these puts were just active all week, 4,000 on Monday, about 5,000 on Tuesday, 1,000 yesterday, and about 12,000 going up today. So 1.75 puts were where the action was out here. Then we go out back here to the Feb front contract, two-half calls doing about 20,000 and change. Those also fairly active. The lion's share again today, 8,000 and change going up today, about 6,000 on Tuesday, 4,700 on Wednesday, and about 1,100 on Monday. So two-half calls in Feb and 1.75 puts in March are kind of the number one and number two trades out here in nat gas land. From a vol perspective, vol coming off pretty hard here in this front contract. Again, it's mostly a weekly now, so vol's going to be moving a little bit weirdly, but still, it's off near about 1 2/3 points here in that Jan contract. So vol coming in quite a bit. Looks like it got maybe a little bit bid up in the wake of all this turmoil, then perhaps coming in a little bit. Of course, we've seen the dire predictions now for winter weather, perhaps not exactly materializing the way some thought. So maybe some of that feeding into what's going on in nat gas. Either way, the vol coming in pretty aggressively. Let's take a quick look at the skew here. Again, this is 25 delta put, 25 delta call. So the old 50 delta risk reversal is what we like to use, but to each their own. The puts were, puts were cheap last week. They were 4.3% cheap. The at the money this week, they are 5.6% cheap. So getting cheaper on the puts. Looks like the action, the interest is to the calls. The calls were nearly 7% rich the at the money last week. This week, they're 7.5% rich the at the money. So the calls getting bid up, puts getting a little bit cheaper. Not surprising. Seeing a little bit of upside. Well, not a ton right now, but a little bit upside of late this week in nat gas. But nat gas has been swinging wildly, and I'm sure this is not the last time. We're going to check in on all things nat gas. Speaking of checking in, Mr. Sean, big things coming. We've been talking here on this show and indeed our crypto show and on the network for a better part of 2 years about when we're going to get these Bitcoin options. They're coming next week, Sean. So the next time you and I gather here together on this show, Sean, we'll be able to talk crypto options. What do you think of that?
I know. There's been client demand for these, and they've been a topic of conversation since I joined the show. So it's exciting to see.
I tried to get your buddy, Mr. McCourt, on the show today, but he's, as you might imagine, a little busy running around preparing for these new contracts. Maybe we'll get him on next week, and that'll be fun to hold his feet to the fire a little bit and see how these things are going. But they are coming January 13th, listeners. So, yeah, by the time we gather here together on our next show, we should have some numbers. Again, these are obviously off of the CME Bitcoin futures, which have been doing pretty robust volume in and of themselves. And everyone out there who's been waiting for a listed, a centrally cleared type product in the Bitcoin option space, they don't have to tunnel into with a VPN into some international entity where they're violating the EULA and everything else. Don't have to worry about any of that. It's coming next week. So set your calendars. We'll be looking forward to it. We'll be talking about it on crypto next week as well. But we're kicking off the new year. I want to make sure we get some of you folks on as well. So without further ado, let's dive right into a little bit of an extended futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it. You send questions. We'd like to get you on the show. And what better way to kick off a new year and indeed a new decade than with some of you folks. First up, Sean, I hope you put your question answering pants on, because this first one's for you. Comes from, I like this handle, Demo Cat. So maybe he's a cat who gives demos. Maybe he's a Democrat without the R. In many ways you can go with it. But I like the notion of a cat giving demos. That's just kind of fun. He or she wants to know, are there any plans for mini Russell options? So, Sean, I guess he's saying the current Russell option's too big for his taste, too big for his britches. He wants to know if there are any more bite-sized contracts coming. Anything you could let our friend Mr. or Mrs. Democat in on here, sir?
I'm thinking these are because he's having Democat, he or she is having such a great experience trading the micro options at CME Group that have just taken off in terms of volume. So
I'm guessing these probably are related. Yes.
Yeah. So I'm thinking he's looking for some micro Russell options to complement the futures trading there. Great question for our partners at SIBO and CME Group. And again, just as Tim McCourt's very soon to launch Bitcoin options, this is a great question for him. And this kind of client demand and this kind of feedback is exactly what the exchange is looking for in terms of that next slice of product enhancement to enable our clients to trade Russell futures and options in the kind of notional value that they want to trade them in. So, Mr. or Mrs. or Miss Democat, thanks for the question, because that's right up the alley of what we need.
And you're right. They write mini, but I kind of read that as micro as well. Obviously, the micro contracts were one of the runaway hits of 2019 for CME, exceeding perhaps anyone's expectations of what those things were going to do. So it sounds like they want a micro. Nothing in the works yet, Sean, but maybe stay tuned. Maybe we'll leave them with that. What do you say?
But let's definitely stay tuned, and let's get Tim McCourt on the show. They would, and probably Rick Rosenthal from SIBO. Let's get those two guys on, because they're the ones that would be launching them in partnership with us as being the index provider. So hopefully we get some color from our exchange partners.
There you go. So if you want these things, keep asking for them. Micro, by the way, you're looking for micro, I believe. You already got bite-sized Russell contracts out there. Micro, I think, is the way you want to go with those. Let's see. BKL61 has a question. We get a lot here on the show. He wants to know, or he, maybe she, who knows, what is the proper time frame for trading futures options? In case you can't tell, I'm pretty new to trading. Just discovered the program. I'm loving it and learning a ton. Thank you so much. Well, you're welcome, Mr. or Mrs. BKL61. Love to have feedback. Love to have new people discovering the show all the time. That's why we do it. But we get variations on this theme quite a bit, and it's going to vary for a number of different factors. What is your use case for the options? Are you looking to hedge something else? Are you looking to generate income? Are you looking to speculate? Why are you using these options? That'll help dictate some of the time frames. In general, you want to keep a lot of your premium harvesting fairly close to expiration. You want to move some of your premium buying a little bit farther out. And obviously, there's a lot of wiggle room and nuance therein, so a little bit more insight into that would be helpful. And also, what products are you looking at? Because how these products trade are all very different. If you're looking at equities, like we're talking with Russell now with Sean, but S&P, NASDAQ, you're looking at the equities, the lion's share of the action is in the weeklies. So that's a very different beast. And if you're looking at some of the other commodity-type contracts where the action is kind of dictated by a harvesting cycle or by crop reports or by any number of other factors that drive where a lot of the liquidity aggregates. So let us know, BKL61, what products you're trading, what products you're looking at, and also what some of the use cases you're looking to do. And then once we have a little bit more insight into what you're looking to do, we can kind of guide you on time frame, because there's no hard and fast rule. It kind of depends what you're looking. If you're looking for some kind of future / stock substitution, you want to go longer term. If you want to go harvesting for premium, you want to go near term. So there's a lot of different ways to slice that. Give us some more information, and we can help you out more. Sean, are you on board with that? We need a little bit more info to really provide some concrete info for the creatively named BKL61. Maybe he likes broccoli 61.
You gave him perfect advice. We just need a little more information, and happy to walk down the path in terms of which asset class you're talking about and what kind of time frames you're talking about. And again, is it a portfolio enhancement? Are you looking to write calls against an underlying you're long? There's so many different options trading strategies. But they're all very, very interesting and really not difficult to learn. It's just a matter of, one, getting that fundamental knowledge, two, putting them into practice, and just make sure you know what you're doing before you start trading them. That's all. So happy to help you there. But there's lots of education on the CME and SIBO website in regards to options as well. So I would definitely tell you to point to those two exchanges and look at their education pages because they can help you tremendously.
Yeah, you kind of mentioned the last of the big exchanges that still spend a lot of effort and time trying to educate people. So you're right. You can go there and get some education on as well. But yeah, send in some follow-ups of what you're actually looking to do, and we can maybe point you in a more clear direction. All right. Interesting. Got a chart in here from WinSmart CFA. And he sent us a chart of the price cycles across major commodity groups with the percentage deviation from the long-term trend. I know it sounds sexy, listeners, but bear with me. It's interesting. It breaks it down into 4 base categories. You got oil, livestock, base metals, and agricultural products. And these are mapped on the chart here. And it shows kind of their individual deviation and how much of a percentage it is from the long-term trend. And they make an interesting little note here about, although individually volatile, all 4 of these different subsectors, all 4 commodities tend to sync up, creating eventually what is termed as a macro trend. And this is kind of something we touched on here on this show and other shows in the past as well. I've jokingly referred to it here on the show as when it all hits the fan, that correlation tends to move to 1 pretty quickly. And this chart may be a bit of a longer-term proof of concept for that. But you can also notice in the ebbs and flows, it's a bit of almost like a sine wave here on this chart. And again, maybe we'll include it in the show notes so you guys can see it for yourselves if you're listening along. But it's a bit of a sine wave, and it shows how even though these products, seemingly unrelated, have interesting trends that tend to move in aggregate. Sean, this is an interesting chart. I'm not sure if you had a chance to check it out. You know what they're missing on this chart, though, Sean, is a 5th category, which would be equities. That'd be interesting to see how that compares. What do you think to that, Sean?
Yeah, where's that Russell 2000? No, I'm kidding.
just small cap. That's all you want to see on here. Next, this is an interesting one. I like the handles today. Tortured China. No, I'm sorry. Tortura China with an A. They say this is going to be a bumpy ride, and he's referring to the launch, an interesting article on Bloomberg on the launch of these SOFR, aka the Secured Overnight Financing Rate. Say that 5 times fast, listeners. Futures. These were listed on Monday over there on CME land, and a whopping 10 contracts traded, 5 in a straddle. It was in case you're curious, listeners, 98.625 straddle in DEES 2020 for the 3-month SOFR futures. So kicking off these products, I know we've mentioned them before on the show. These are a new addition to the CME arsenal. As Bloomberg terms it, this trade anticipates higher volatility. I'm not going to read too much into a 5-lot straddle. That's not really 10 overall contract. It's hard to say that's dictating any sort of presumptive outcome for the rest of the year. But it's interesting to see, if you're not familiar with this, listeners, the Secured Overnight Financing Rate. It's a reference rate coming out of the Federal Reserve Bank of New York. And again, this is all intended in the wake of the LIBOR scandal to have some new alternatives to LIBOR. So CME rolled out the futures, the SOFR futures, back in 2018, and now they've got the options on those SOFR futures. So interesting stuff. I'm not sure what Tortura China is referring to. Are they saying is effectively it's going to be these products? Are we in for a bumpy ride with the products, or is it just the market in general? It's going to be a bumpy ride here. The product is going to be a bumpy ride in general. I don't know, Sean, how do you read this? You think he's saying the options on SOFR futures, that's going to be a tumultuous market for the coming year, or is it going to be, is it something else? So what do you think about this? I like the handle, though, Tortura China. You like that?
Yeah, interesting handle. I don't get his or her comment or question, but bumpy ride. I just keep thinking back to the time you and I looked at one option within the Eurodollar complex and saw 250 or 300,000 call options had traded in that single option. And you said a 10-lot strangle or a 5-lot straddle traded, right? Or total of 10 contracts. Are they referring to that? I don't know.
Yes, I guess. I guess that's we're in for a bumpy ride with a 5-lot straddle there, Sean. I don't know, but interesting. I just like the handle, and I like the notion because these are new products. You don't get new options products listed over there on CME every day. So interesting ones. If you're intrigued by that space, who knows? Maybe these SOFR options and futures, maybe they'll take off in the wake of all this LIBOR madness here. We shall see. The rates complex, obviously, doing a lot of paper these days, so there's room for growth from a 10-lot. So we certainly shall see. Next up, I'm going to butcher this probably. Abhishek Jain says, Dear Sir, can you share a free source of U.S. commodity option chain, preferably gold and crude oil? I'm going to go out on a limb and say probably English not his first language, but good job there, Abhishek. Hopefully I didn't butcher your name too much. This is an interesting question. Free commodity options chains. We don't get asked about that a lot because the chains are usually provided free of charge from your broker. So I'd encourage you, Abhishek, to go on and reach out to your broker, whoever you're using, or if you don't have a broker, set up a demo account at any one of these major brokers. That'll give you access to the options change. You can also find a lot of this stuff. Just Google, Yahoo, that kind of stuff. They'll have a lot of these chains up there. Those are probably delayed, not as useful for you. So set up a demo account with any of the major brokers, and they're easy to find, and they'll give you the change. I also did put him in touch with Nick and his team over there at QuickStrike because they have some interesting pricing sheets that he may be interested in. So I know they've been talking back and forth a little bit as well. So hopefully that was useful for you. Check out the QuickStrike stuff as well. It's not exactly options chains, but it is a lot of interesting data once you have access to the chains. You can learn what to do with it, and that's a good place to go. So hopefully that was useful for you, Abhishek. All right, next up, this is an interesting one, Sean. Steve Wim wants to know, what was a weird trend that came on your radar in 2019? Well, I'll go first, Sean. I'll give you time to mull this one over. For me, I mentioned at the top of the show, the endless persistence and indeed volatility of the dairy complex was a fun surprise trend for me in 2019. We used to joke, even at the beginning of the year, class 3 milk, there it is again, not really an option story, not much going on there. And then lo and behold, it became less of a joke and more of a regular depiction on the show. So much so that our friends over there at T3 actually created a milkshake index. So you can actually map and track dairy volatility. I think most of it, again, is for that ANZAC region. Not a lot of U.S. listed stuff in there yet, but it's worthy of note to keep it. There is an actual volatility index now for dairy over the course of 2019. So who knew dairy was going to be on our radar so much? It's going to become much more of an option story, much more of a volatility story in 2019. And we used to kind of just dismiss it as a joke, but now it's becoming much more credible and much more interesting. And it's certainly, judging by you guys, it's on the radar of a lot more of you out there in the audience as well, as you're always looking farther afield for new places to go, for fun, exciting, volatile products to trade. All right, Sean, I bought you some time. That my weird trend was, I guess you can call it the rise of dairy volatility and volume, and from an options perspective in 2019. What would your weird options, futures options, whatever you want to call it, trend of 2019, what would you say, Sean?
It was a trend of volatility within the VIX versus the RVX, and again, I'm of course bringing up Russell, but one is the how the spread widened and came in on a very interesting tradable way. And again, to capture RVX volatility, you have to trade the Russell options at this point, which brings up the point of the trend that I wanted to bring up. And the trend is the clients that keep calling and asking about RVX futures and the desire to have those back. Now, I talk to SIBO Global on a regular basis here, but again, what brings those futures back and really lets us talk in a big way, VIX versus RVX, and that spread, is to have an active future trading there. So keep the questions coming. That client demand is all being weighted and is being observed by our partner exchange, SIBO. So I'd love to see a viable spread between those two products come back this year. How's that for a trend?
I'm with you on that. I would love to see RVX make a resurgence here in 2019. So, yeah, keep those queries on RVX coming, because we were the only people to talk about RVX in its first incarnation. I'm glad to see we're not the only ones interested in it, hopefully ahead of its second incarnation. So fingers crossed, maybe by the end of this year, Sean, you and I will be chatting about a little product called RVX yet again. Unfortunately, that music, listeners, means we come to the end of another epic sojourn through the world of all things TWIFO, kicking off some fun futures options action here for the year and indeed for the decade. But before we go, let me go back around the horn. Sean, I will start with you as my non-in-studio guest. As you're busy recovering over there, folks want to check out what you guys have cooking in the land of FTSE Russell. Maybe you want to leave them a little bit of a hint, a little bit of a tease. Now is the time, sir. The floor is yours.
I love the question regarding micro options on Russell. So keep those questions coming. That's a good question for our partner exchanges. That's one. Two is the increased volume and activity in our Russell futures and options. It's very exciting to see. And its global reach. And three, the performance of the index, 24% last year. Let's keep an eye on this because it was just December. You and I were talking 1,600, and we clearly blew through that in the month of December. So let's keep an eye, and let's keep trading Russell futures and options.
There you go. FTSERussell.com, FTSE Russell.com, the place to go for more info in between episodes of our show. And, of course, give them a follow over there on the Twitters as well, at FTSE Russell, for all the data that you guys love in between premium harvesting, all that good stuff. It's all there. And, of course, you know where to find all the stuff on CME, including Eric's paper, blue stuff, a lot more. CMEgroup.com, the place to go. /TWIFO is where you want to go to get this show, but there's a lot of other great stuff there as well. You mentioned the education earlier. You can find that there as well. CMEgroup.com is the place to go. And on behalf of Mr. Sean and, of course, our friends over there in CME land, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing, for making 2019 such a great year for TWIFO, for kicking off 2020 in such grand style. We'll look forward to new episodes, new fun stuff, and new questions from you coming as the decade unfolds. Otherwise, we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern, and then right back here again next week on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.